Accrual accounting, and now in this module I'll be discussing with you one very interesting thing that will make this concept more clear and will give you confidence as well. So this is a diagrammatic understanding of accrual concept. Here we see that there is a year bar, you see, starting from here to here. This is a year bar. Year bar means it is your reporting period. Okay. Well, so what we do that in this reporting period, either we pay cash or we receive cash. So in this reporting period, there will be cash receipt or payment. We have to adjust this cash thing. We have to adjust this cash with opening, advance, and with opening, owing, and at the same time with closing, owing, and with closing, advance. Okay. So what you see that we add opening advance in this cash. Okay. Coming in. We add closing owing in this cash figure, and we subtract opening owing from this cash going out, and we subtract closing advance from this cash figure, and the outcome is the expense or income for the period. I trust this diagrammatic presentation will give you more confidence. It will enhance your confidence to learn this accrual concept. So let's see that there is an example on this diagrammatic presentation. I will solve this example through diagram, which will be easy to understand. Just see this type of diagram, okay? But let's see what is in this question. Yasin sets up a business on 1st January. Remember, whenever you read question, underline the dates. Very important thing that whenever you read question, underline the dates. So on 1st January, it started business and its accounting year is ending on 31st December. He acquires telephone connection on 1st February. So important thing, although the business was set up on 1st January, but its telephone connection was taken on 1st February. And he agrees to pay bill quarterly, means for 3 months in arrear. Now we understand what is this arrear thing. So year 1 invoices are being paid as follows. On 30th of April, year 1. On 31st of July, year 1. On 31st of October, year 1. And on 31st of January, year 2. These amounts are with us. So let's see this diagram. Our year bar is starting from here, ending on 31st of December over here. So 1 month, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12. So it is ending over here. Now the thing is that when we are making payment, just see 30th April, 31st July, and 31st October. So see, here we are making payment. Here we are making payment. Here we are making payment. And since it will be paid in arrear, so the 4th payment will be made, means this 9,000 will be paid at the end of this January. Okay. Well, so this is the month which is out of our year bar. Well, so this 9,000 that we are paying here for 3 months is covering which month? November, December and January. So November, December means 2 months are falling in our year. So 9,000 2 by 3 is 6,000. This is what like is our expense belonging to this year, not yet paid. And this 3,000, it does not belong to this period. So I'm taking it out. So what to do? The telephone expense for the year is this 5,000 coming here, 7,500 coming here, 8,500 coming here, and this 6,000 belongs to this period. So total expense is 27,000. Interesting? Yeah, definitely interesting. Well, so this is what I have discussed with you. Let's see. Year 2. For year 2, invoices are paid as follows. 31st January, 30th September, 31st July, and 31st of October, and the next is on 31st of January 3. So here we see that our year is starting from this period, ending over here. Okay. So this 3,000 belongs to our current period, but we are paying 9,000 for this. So what we will do, we will take only this 3,000 here. So if you will take 9,000, then you have to subtract this 6,000. But if you are directly taking 3,000, it's okay. It makes sense. And this 9,500, yes, this belongs to this period. 10,000, yes, this belongs to this period. 10,000, yes, this belongs to this period. But here, 7,000 belongs to this period. So we will take this 7,000 here. So it will give us 39,500. Interesting. Definitely interesting. Okay. So let's move forward. That what happens if we are working out one account method. So just see that we are taking only those figures which belong to our current period. So that telephone payable account will look like this. Here we will be taking only payments, and the closing amount due. Total 27,000 will be taken to profit and loss account. Whereas for the year 2, one account method will look like payment. Okay. And this due. This 6,000 we are taking out because although this 9,000 was paid during the year, but 6,000 was opening due. Take it out. If you see that the difference of these two is 3,000, which is impacting on the debit side if you remember this 3,000. Okay. So if we are putting this 9,000 over here, we have to subtract this 6,000. Makes sense. Okay. Then comes our 2 account method. In this 2 account method, we are preparing 2 accounts, expense account and payable account. In the payable account for the first year, there is no opening balance. Obviously, we know very well. But we have paid. For the 4th payment, 6,000 is due. Take it here. And this is our closing effect. And this 6,000 will be credited in the liability account, which is leaving a closing balance. Now we are smart, definitely smart. So this is liability for us and this is expense for the year. Okay. Now for the second year, what we have. Now for the second year, we are preparing 2 accounts, telephone expense account and telephone payable account. And what we see that we have made payment during the year 9,000, 9,500, 10,000 and 10,000. These were the payments that we made during the year. And this 7,000 is the amount payable against this telephone expense. Okay, so this 7,000 is appearing here as our liability. It is expense for the year. Debit here and credit here. Got it? Well. And one thing, do remember that all 9,000, it doesn't belong to our year 2. So what happened? That 6,000, yes, this 6,000, yes, this 6,000, we know very well that it was our opening balance. This is something that was placed in the credit side. Now will be adjusted against the payment. Since we have shown all this payment over here, so we have to subtract this 6,000 by giving debit to the telephone payable account. Its accounting entry, we have already discussed that this is reversal of the accrual. Okay, well, so by doing this, the carry forward balance of this telephone payable will be taken to our liabilities in the balance sheet, and this will be taken to profit and loss account as our expense. Okay, so this was very interesting exercise in which we learned how to deal this complex situation through a diagram. So this diagram is something very much helpful for us to work out this accrual or complex accrual thing. So the important tips to remember in this module are that cash receipt or payment happens during the reporting period, for which you can abbreviate it as DTY, during the year, and income or expense is measured for the reporting period, okay, FTY. So what we do that during the year we receive cash, then we adjust it with the opening accrual, closing accrual, opening advance, closing advance, and the outcome, what comes out, is known as expense or income for the year. Okay, thank you very much.